In the past 30 days, I received dividend payments from 7 different companies, and I'm going to be sharing with you all the income that I made, how much I'm up and down in every stock, and what do these companies do, as well as a quick stock portfolio update. The market has been on fire lately. The S&P 500 and the QQQ literally today hit an all-time high. So congrats if you own any stocks. Your portfolio has got to be doing pretty good right now. But I also love dividend investing, and every stock in here actually pays a dividend. Most of these are like dividend growth stocks. Some of you are going to say like Google, Meta. These are like dividend growth companies, but I do have some stocks in my Roth IRA that are like more pure play dividend stocks. Like the first stock I actually want to go over that I received 2 payments from, and this is crazy, is ticker symbol MAIN. Check this out. I actually got paid twice, one $2.50 payment and one $3 payment. And this is a company that I own here in my Roth IRA. How are we doing? I think all time, yeah, we're pretty much at an all-time high today. We're up 14% all time, but Main Street Capital has been one of my better performers in here. We're up nearly 10% on Main Street Capital. And what's cool is this company actually pays a monthly dividend, and they have to literally by law. If you look in the very top there, you see dividend yield. It's a 4.9% dividend yield. That doesn't include the special dividends, and they just paid me a special dividend this month. So normally they just pay you 25 cents per share, but they decided to give you a bonus 30 cents per share. So that gave me an extra $3 for the month. So that's crazy. That's a huge extra special dividend. So that's what's really cool. Some companies make so much extra money that they can afford to do special dividends, and Main Street Capital can easily afford to pay that. They're a BDC. So this next company is, of course, a dividend growth company, but this is Meta right here. I received a $2.63 payment from Meta. Now, this company has been on fire. They acquired Scale AI. They just announced that they're going to put ads on WhatsApp, and that's a huge earnings tailwind for Meta. It can't hurt them. So they're going to they've been waiting a long time to try and monetize WhatsApp, and they're finally able to. And check that out. Just on May 29th, I bought another share at $644 that made they pay 52 cents a share, not much. So our 5 shares paid us $2.63, which is pretty cool. And also, Meta, they acquired Scale AI for $15 billion. That's going to add over $250 million of revenue to their total revenue every quarter, which is pretty cool. And they're doing buybacks. They're just such an innovative company. Half the world uses one of their apps, Facebook and Instagram and WhatsApp a day. So yeah, Meta is a great buy and hold for the long run company. And I also want to say all these dividends that I get in here are actually tax-free. So even though this is my taxable account, these are all tax-free dividends because they pay qualified dividends. And if you make under $50,000, all these dividends you get that are qualified are completely tax-free, even in the taxable account. So yeah, let's get to the next dividend payment here. We also got $4 from Google. So that's actually a pretty good payment there. $4 from Google. They're such an innovative company. They own Android, they own YouTube, they have the search, they have the cloud business. The Google Cloud's been growing like crazy. They just acquired Wiz, which is a cybersecurity company, for $30 billion. And check this out down here. Yeah, we've been in April and May, we were buying the dip on this company at 150, 148, and that received us a $3.99 dividend. We have 19 shares currently. They paid 21 cents per share, which is pretty cool. So even though this company, the yield's really low, I get that. I expect this one to have a lot of stock price appreciation and just dividend growth in the future. They have so much room to raise their dividend. Also, Google owns Waymo. They have their own TPUs. They're in quantum. Google's probably going to be the leader for quantum. They have the money and the talent to be the industry leader. So that's really cool about Google. And next up, we have McDonald's right here. My largest payment, $23 from McDonald's. We got 14 shares of them, and McDonald's has one of the best stocks I've ever seen for a blue chip. As you know, this isn't just a restaurant stock. They're actually a real estate royalty company. Whenever you go spend $100 at a McDonald's, $4 of that goes back to McDonald's parent company as a marketing sales and marketing royalty, and that's what they call it. And they also own the land under 80% of the U.S. McDonald's stores, so they have so much land. If they actually converted to a REIT, they'd be in the top 10 largest REITs. They actually chose not to, though, which I think is a good move because these dividends are qualified. And yeah, anyway, McDonald's is really a real estate royalty company, which is cool, and they pay me a lot of dividends. So next up, we have CEG Constellation Energy. Now, this company right here is huge because they are the largest market share for nuclear energy reactors. So in the US, there's no other company that has more nuclear energy reactors than Constellation Energy. So they're the largest pure play for nuclear energy, and we're up 51% on them. They've done great. They've been one of the best performing stocks in the S&P 500 past couple years. Here, look at that. They haven't even been public for a year, or for 5 years, and they're already up 580%. So yeah, this is a really cool one, but it's tough to buy this stock right now. But yeah, they're a utility play. They're acquiring Cal-Maine. It's going to be instantly accretive, $2 of yearly EPS for them. So that's what's crazy about them. Also, this is technically the same month, June 2nd. We also received $13 from Carlyle Group. This is our largest holding in here. We have 13 shares of this company, and we're up 22% on them. But the best part about this company, of course, is the dividends. Yeah, look at that. Our dividends went from 12 to 13 because we just bought another share of them. But yeah, this company has literally bought back 7% of all the shares in the past year. So this is really just a shareholder-friendly company. They literally are a buyback machine. They're acquiring other companies. So Carlisle is a really cool stock. So that was all the dividend income from our Robinhood portfolio. Now I want to show you some income from the Moomoo portfolio, and I'm not really going to include this dividend. Like if you look in the middle of my screen, I got a lot of cash on hand. That cash earns 11 cents of daily interest. So we've been getting a lot of interest from that cash. But so here are our most recent dividends. We got $3.21 from Powell Industries, which is pretty cool. And this company right here, I do own this one. This is my buy and hold portfolio. Once I buy a stock in here, I try not to ever sell it. But Powell Industries is such a great company, in my opinion. Very low valuation of 15 PE and a $2.6 billion market cap. So you do got to be aware, a very small market cap, but they traded at 15 PE. They have absolutely no debt at all. They're a debt-free company, and they've just seen really nice growth. If we go over here and look at this net income right here, this is insane. They're now making, close to 50 million of net income a quarter. They also pay a dividend, a 0.5% yield, and the payout ratio is only an 8%. The payout ratio is so low because of the valuation. The PEs of 15. So and they just have been so disciplined. So yeah, Powell Industries is one that I really like. And again, that we didn't receive much in dividends from them, just like $3.50. But yeah, another thing we'll go over for dividends is my Weebull account right here. So this account right here, I mainly have I have no dividend stocks. I mainly like to buy growth stocks in here, but this is year to date, so this isn't really the past month, but hey, why not share it? I just like being fully transparent. Here are all the dividends that I've received year to date in here. T. Rowe Price Group, that one's actually most recent. They paid me $7.62. This is an asset manager, and what's so great about T. Rowe Price Group is they have no debt at all. I'll be really quick about this. I'll show you what's so cool about this company because it really is impressive in my opinion, and I do own them, so I might be biased, but yeah, we got 6 shares of T. Rowe Price Group. They right now have a 5% dividend, and that dividend is qualified, which is pretty cool. But check this out right here. The net income, they're easily making 500 million plus in net income a quarter. They had a one-time adjustment because the operating income actually grew 2%. But anyway, they're making, let's just say, 500 million of net income every quarter. Let's go see how much their 5% plus dividend cost. Only 289 million. So they actually have room to raise their 5% dividend. And look at this. Here's what you won't believe. If we go to total debt right here, 44 million. I mean, call it zero at this point. $44 million of debt. They have cash on hand of $2.84 billion of cash. I mean, that's ridiculous. And if we go to the shares outstanding, you also own 1% more of the company because since they have so much cash, no debt. Look at the buybacks. They just spent $200 million buying back their own stock. This is just such a shareholder-friendly company, and they're worth $22 billion. So let me know what you think about T. Rowe Price Group. This one hasn't look at them. They've kind of been flat for a while since 2019. But yeah, I think the risk to reward looks pretty decent on them. So next up from our dividend portfolio, we have Molson Coors, ticker symbol TAP. Now this company right here, I really like their brands. They own Blue Moon, they own Coors, of course. Oh yeah, and here's the portfolio. We hit an all-time high in here today. This isn't great performance, but we're up 12% all-time in here. And the fintechs have been going nuts. Dave, Robinhood, SoFi, but that's for another video. But I wanted to go over ticker symbol TAP right here. So ticker symbol TAP, we are down 4.3% on them, but look at this. We actually just bought 2 more shares. This was 2 days ago. We bought 2 shares at $48.11. What is it now? 49, not much. Oh yeah, you see little buy circles right there, but this company is equally as impressive. So check this out right here. If we go to the net income, kind of average it out here, they're making easily probably 240 $40 million of net income a quarter. So they're making like $240 million of net income every single quarter. And check this out. Their dividend only costs $99 million. They just rose their dividend. Oh, I forgot to show you the yield. Yeah. You get a 4% dividend, a 3.8% dividend, but that's not the best part. So, the payout ratio is like under 40% for a 4% yield. The real best part about TAP, again, just like kind of like T. Rowe Price Group, is that the fact that they're buying back their own stock like crazy. Look at that, 60 million, 200 million, 200 million. They're not diluting you as a shareholder. So actually, if you go to the total common shares outstanding, you now own 4.5% more of the company than you did 1 year ago. I mean, that's so impressive. So that's why I really like TAP. The buybacks, the dividends, they're good brands. So yeah, that's what's cool about them. Let's see what's next. Dividends right here. Clear Secure, Cal-Maine. Yo, actually, let me go over Cal-Maine because this company, they sell a commodity, by the way. They sell chicken eggs. They have a 20% market share in the U.S. for chicken eggs, and that's all they sell. So whenever there's the bird flu, a bunch of like chicken farms got burned down and stuff. It was sad, but it actually benefits this company like crazy. They're still a small one, a $4.9 billion company, and their dividend changes every quarter. I'll just be transparent. Look at this right here. It was $3 in the most recent quarter, then it was $1. And but look what's crazy. The stock price is $102 right now. So it's $100 and they paid you $3.50. That's literally a 3.5% instant qualified dividend tax-free return that I just got. So I got 3.5% of my money back instantly in a tax-free dividend. And look at this. This is what I can't believe. The net income growth. I mean, it just exploded to 500 million in the most recent quarter. And there was 200 million the quarter before. But let's see, how much did that huge dividend cost? So they made 500 million the most recent quarter. They literally spent 1/5 of that. They spent $73 million for an instant 3.5% return. I mean, that's incredible. Are they buying back their own stock as well? Probably not. I mean, they did, but not much. Yeah. Oh, yeah, look, this company has no debt either. This is a completely debt-free company. No long-term debt, so they don't owe anyone any money. And they haven't really been diluting you or really buying back any shares. I guess it's tough for them to buy back shares when it just keeps hitting new all-time highs. Check that out. But I think this one, they just sell a commodity, again, chicken eggs. So if we look at the PE is a 4. They're literally trading at 4. That's the forward PE. So that includes next year's numbers. So actually the trailing 12 months PE is a 5. They're expected to keep on growing their net income to a 4.3. So probably got to do a 2 or 3 year out multiple on that one. But anyway, I got a huge dividend from that company, a 3.5% instant return from them, and their dividend changes every quarter. So I think that's a unique feature about that stock. So yeah, and today's video is sponsored by the Moomoo Investing app. You see me use this platform on the channel all the time, and that's because it's so useful. You can buy stocks and do options on here, and they have all the best research analysis tools. Whenever you're trying to analyze a stock, you can see the Morningstar research, what the analysts are saying, and if you download Moomoo now and deposit $100, you'll get 5 free stocks, and you'll get more stocks if you deposit a lot more money, and you get a 4.10% APY on your cash. Check this out. I take advantage of this. This is where I keep most of my cash. I have $1,000 in here, and it earns me a nice little yield. So make sure to download Moomoo today with my affiliate link. It'd help out the channel, and thanks again to Moomoo for sponsoring today's video. Anyway, that was the video right here. If you guys did enjoy, please drop a like on the video and check out this Moomoo app right here. This is my favorite app for all the analysis.